that you see here, parallel channel, big breakout, wide range bullish candle. Same thing on Banknifty also. Cup pattern breakout already started. 3 days of consolidation and a good breakout on a monthly expiry. So the September series ended with a new record highs, and that was at about the 26,200. Can you believe? Banknifty also moved substantially well and is heading towards the 54,500. So it's close above the 54,375. So what a day, what a day. Beautiful trending day and big breakout at 3 o'clock. An expiry day. Same in Nifty and Banknifty, both beautiful day. With trending up, some post in the afternoon, and then a big breakout post noon. So that's what. So if you look at the levels for the Nifty charts that you see here, the next level would be the 26,300, then 26,500. 26,300 nearby is exactly 288, 26,288 because it's Fibonacci 61, and there could be some resistance in that zone. So anything about 61.8 can be mega breakout. So that does not happen just like that. There may be a post that can come in there at 26,300. So we get out of that. And after that, 26,500 is a rounding number. That's how it goes. This is for tomorrow. And first support could come in at the breakout zone. CRP bounce possibility is there if it comes there. That's the 26,000 level. 26,000 is a good support. If that is taken out, then 25,850 good support, because that is another breakout zone, previous breakout zone that can act as support. After that, you have the 25,500 where the Fibonacci extension and previous breakout zone is there. So those are the two levels on the downside and upside on the Nifty. Similarly, Banknifty, it's a cup pattern breakout that's happening. It's already started. It's substantially moved from 53,350 to 54. So it's 1,000 point move has already happened, and that's a 3,000 point move if you look at the height of the cup. So another 2,000 point easily can go. So next target will be 55,000, and after that you have Fibonacci 78. That is 55,450 nearby. So that is what is anticipated. That will be the top of the trendline channel also, right? So those are levels. So otherwise, new open interest. So we don't need to look at that. So there's a big fight for the 26 initially, and then it broke out to 26,200. That's what happened today. FIs were selling for last 2 days, but today they must have bought. That has not come in, but they must have bought really big, because they're selling for 2 days, where FIs are buying. So today FIs might have bought, is what we might have to assume. If you look at the different industry sectors, all of them perform. All the different sectors perform, have close green at least. What has performed is the metal and the auto, which has made about 2%, and FMG also did well, nearly 1%. So that's the kind of breakout. So almost all the sectors are bullish in the medium term now, right? So sector wise, that's what is happening. But mid cap and small cap face some resistance. Small cap is down. Small cap is actually down by 100 points. So you got to be careful that broader market rally is not happening. So for some good, it's the big money that's flying into big heavyweight stocks. Otherwise, VIX has cooled off. It's a long volatility regime at 12. Right, 6% of fall has happened today. The VIX, so market is rising up and VIX is falling. Quite natural. And volatility will be more because VIX is at the very low volatility regime. So it was very volatile because today was expired as well, and the premiums were also not at all decaying. It was waiting for the big breakout that happened at afternoon. So that's big money that's flying in, and market's super strong with no signs of any fatigue. Very small retracements and very small consolidations, and then another leg of move. That is what is happening. Running amok, running through the roof, whatever we call it. So US market, it's showing some fatigue. Yesterday it was Dow Jones was slightly down. If you see the futures, gold is making record highs. It's it's at all-time record highs, and crude is following some bad news on war and all that. So next levels we already seen, right? So that's about it. So yeah. That's it. Bye.